you miss out on these tax deductions, you may never be able to get them again after 2028. Let's review what happened in the OBB bill, the one big, beautiful bill that everybody's talking about. And for those of us that are planners, some of these things are really significant and some are not so significant. First and foremost, if you're affluent and your estate's $30 million, you have a $30 million federal estate tax exemption now. So this is a permanent thing. This is great for people that are super affluent. It also affects people that are high income. That tax bracket is going to remain at 37%, now 39.6. So if you're an affluent person, these two big changes, the 30 million and the maximum tax bracket of 37 is going to be a financial win for those folks. Now, the SALT deduction, which was $10,000, has been raised to $400,000. It does phase out at about $500,000 of income, but this allows you to take more deductions for state and local taxes. Who knows how many people that's going to really affect, but for those blue states where state and local taxes are significant, this could be a big win. Now, the standard deduction has been raised to $31,500. That's a good thing. It means that everybody who's filing their taxes can get a better standard deduction. Now, what's interesting about some of the rest of the changes is they're going to be phased out in 2028. So this has a lot to do with taking the money now, because in 2029 you won't be able to get it. So for instance, the no tax on tips, there's a $25,000 deduction. It's for a couple of years. This is sort of like a little gimme. It's a short-term one. I don't know. We've seen a lot of people over the years that had some tip income. I don't know how many people this is really going to affect, but they can get a break on $25,000 of tip income. Same applies to overtime. There's a $12,500 break for people who have overtime. It's a short-term break, but you'll notice that most of the things for the regular working people phase out in 2028. Now also, if you're in business, this is a great bill for a lot of reasons. The bonus pass-through, what that means is that if you have your business set up properly, and if you're in business, if you're a side gigger, and you have a pass-through entity, that's an LLC or a sub-S corporation, right? You'll be able to get a 20% waiver on your first 20% of the income. That means you won't pay taxes on that, right? That is a huge break for people that are in business. Also, if you're in business, they have this thing like 100% expensing. It's complex to go into, but most importantly, you should know if it's your year to buy a private jet, you'll be able to write that off 100%. This obviously doesn't apply to regular working people, but if you're in business, in addition to that, there's a thing called Section 179 depreciation. It won't mean much to a lot of people, but the OBB bill is very favorable for business owners, people that are investing in equipment for business, and as I said, if you happen to be buying your private airplane this year. Now, there's another thing, there's a standard deduction which is also going to expire for older Americans, as much as $7,600 of extra standard deduction. Now, this is the reason why we think for a lot of people that they would want to do something in 2025 to maybe do a Roth conversion or something so that they can reduce their income and for the next 3 years through 2028 capture some of this standard deduction. Now there's a lot of things in the OBB bill that are very favorable to business, and there are some things in there, minor things about, $1,000 savings account for children and some extra tax credits, but they're pretty minor compared to these major things that are in there. In order to find out more about how this big bill will affect you and how you do your planning before you do your tax return, you should reach out to your CPA and your financial advisor and have them run a little model for you about what you can do between now, which is September 2025, and 2028. The next 3 years is going to be a feeding frenzy for tax planners to try to capture as many of these pieces of the OBB bill, right, that can help you save some money on your taxes. It's a temporary thing, 26, 7, and 8, but something is better than nothing. So from our standpoint, you can go deep into this as an individual, but my suggestion is I'm a big believer in getting some professional help. What you will pay for a CPA to help you capture some of this is going to be a good investment and have a great return on your investment. So this is the year, if you're ever going to do it, to jump on the take the money and run category by meeting with your CPA and see how many of these savings you can put into your checking account. Paying attention to what you pay in taxes under this new OBB bill is just part of the art of being smart.